So welcome to Property Pursuits, everybody. This is our monthly market update, but it's not like your typical market update that's super boring and all about data and numbers that nobody cares about. What we want to tell you is what's happening with economic trends, real estate, interest rates, and then what we're seeing actually work as boots on the ground, what we see buyers, sellers doing, what we're hearing from people. That way you can use it to better strategize for yourself. We have a guest this month joining us. Go ahead, introduce yourself.
Kirsten Childers, and I'm a realtor here with Sierra Sotheby's International Realty.
And she's the shit.
Excited to be here.
We only let people come on the show who we think are really cool. So
this is true.
Ooh, such an honor.
It's a strict screening process.
Such an honor.
also the first female guest we've had.
No, Ainsley.
Oh, yeah.
Oh.
Sorry.
But we are light in that department.
Yeah, we have been. And
Really?
typically I don't really like men. So, but
It's a little weird.
Yeah.
the guys that we
Really trying to bring it on strong.
typically, yes, but the guys that we've had on have actually made the conversation quite different.
Yeah.
No pressure.
Right.
Okay, so last month we did this. We did a recap for you guys on the impact of a Biden presidency versus a Trump presidency on housing. We didn't get into like any.
Of the really juicy stuff.
We didn't get into any of the other topics. We focused on the real estate market and how both of their platforms, if they were to do what they say they're going to do, would impact housing. And since there's been a change of events, we have to continue the conversation and talk about Harris. But if you're looking for balanced information or you're feeling upset that we're not covering the other side today, just go back, watch last month's. We went in full depth. And there is some interesting stuff specifically for Nevadans that Trump is proposing. So I do recommend that you go back and check that out.
Definitely. So to kind of dig into Harris's platform, she hasn't officially announced what her platform is going to be since she ran in 2020. So we can kind of just look at what she's voted for in the past and what the Biden-Harris platform has looked like. So her voting history has included support for an act proposing a $70 billion funding for subsidized housing repairs, and $25 billion of that would be grants for affordable housing construction, specifically in low-income communities, which would be, well, I'll just let you guys decide.
If you think that's good or bad.
She's also endorsed tax breaks for new homeowners. These incentives have mixed reviews. They generally have a minor impact on people actually being able to get into housing because the tax breaks generally don't help with a down payment and actually qualifying for the loan, which is where a lot of people have the problem. So the Biden-Harris framework also put forth rewards for local governments, making it easier for builders to build affordable housing. So that's something. These policies called on Congress to actually put rent control caps on owners who own 50 or more units, which is really interesting. That would actually impact about half of the rental units on the market.
Whoa.
And heavily impact investors too.
We talked about rent caps and how locals feel about that last month. So another plug to go check out last month's.
Yeah, rent caps are definitely interesting in terms of as we were researching this, they're actually very favored by a lot of voters. But the bigger impact to improve housing would be more units, helping stimulate more building. So rent caps have pros and cons, right? They can encourage investors to not invest and also not maintain their properties, but it can also help renters out. So kind of a give and take there. The interesting part of this platform, though, is that the rent caps would be a 5% annual increase, but only for 2 years. And so this
what happens after that?
Well, part of it was also to be encouraging builders to build during that time. So the temporary nature was designed to help tenants while new units are coming to market.
Okay.
Yeah. So pretty interesting. But anyway, at the end of the day, really, we just need more houses. We need 4 million more homes compared to as it relates to the number of household formations we've had in the last 10 years. So
Tell them what a household formation is.
A household formation is when we need an additional house. So it could be a child moving out from their parents' house. It could also be somebody getting a divorce, one household becoming two. It's basically just the new need for an additional household.
Thank you.
Yes. Okay. So there's the agenda on that. How would this impact the housing market? So it's really interesting because generally when we see elections, we see a slowdown in sales volume in the months leading up to the election. So I read an article recently that a survey showed 40% of buyers are actually planning to put their home buying purchase on hold until after the election, which could mean a really good opportunity for people who are sticking it out and buying in the next couple months.
I love when I say things and then Sandy finds the actual data behind what I've said.
And then right after the election, everything seems to go back, pretty much to normal. People, no matter which way it goes. So.
Exactly. Home prices will continue to trend the way they were before the election. Home sales will pick right back up. And historically we haven't seen like a major change. Odds are the Halloween housing market will look very similar to the mid-November housing market.
Yep.
Because I think the market's got a couple different takes on what happens here. One thing that we didn't finish with the whole political side of things is, in reality, what happens with the housing market is very local. So we talked about Biden, we talked about Trump, we talked about now Harris and what their national platforms are for housing. But in reality, it doesn't matter, guys, because what matters is what the local representatives here are going to do and what their platforms are and how they perceive the solution to the housing and affordability crisis we're in. So I would encourage everyone, and I will continue to encourage everyone, to look at your local elections and focus on those candidates, because if housing is an issue that really matters to you, that's where you need to focus your attention.
Yeah, definitely do a deep dive into the local
people. What they do is actually going to impact us.
Yep.
I think that the market could also freeze because I think investors are really savvy to the fact that regardless of who's packing their bags on November 6th, they're not going to get a lot done with a gridlocked Congress. And so markets are going to taper their reactions to any election news, which we've already seen. What they will react to, I think, is economic events, like bad economic news. I think the reaction to that will actually be more than even a rate cut, which is our next topic. But did you have anything else to say about the election stuff?
No, it'll be interesting.
We are in the business of change, and so we just have to embrace it and go with it.
Yeah.
Because every day it's something new.
Staying on top of the trends and educating.
Yeah.
And if you've been staying on top of any trends whatsoever, if you haven't been living in a hole really, then you've seen every real estate professional post about interest rates coming down last week. We saw a lot of movement. Then we gave some of it back this week. And I think after 12 years in this industry, what I've learned is that whenever something has a really fast reaction, it's like a rubber band being pulled too tight and it's gonna snap back. And so it was expected that we would see it this week, that we gave back some of our gains. It's going to be a roller coaster like that the whole way down. When rates go up, we always say, what does Barry say? They take the elevator up and then they take the stairs down. Yeah. So it's going to go like this. But I do think the diagonal line will be, like, if you zoom out, you will see a downward trend in rates. I think rates are done going up, long story short.
Yes.
But Sandy goes, oh no, oh no.
Oh no, I'm going out on a limb here.
But what does it mean for all parties in the market if we do get a rate cut in September? A
lot of people are going to come off the fence.
I think so too.
That have been sitting there.
But what do we think actually happens with interest rates? Because there's the theory that the market's already baked in 4 rate cuts when they were announced at the end of last year, when it was speculated. I should not say it was announced, because Powell never himself said that we were cutting rates 4 times this year. The feds never said it themselves. Just every realtor and lender posting said that there was going to be 4 rate cuts this year. They didn't happen, but I think the market reacted to it already. So how much do we see interest rates really improve if there is a rate cut in September?
I think it's based on feeling. I've already seen optimism, just with what has happened in the last 10 days.
Are you seeing optimism from sellers who've been trapped and maybe they're like, maybe I would make
from
a move
both sides, buyers and sellers.
Everyone's talking about how rates coming down will have both positive and negative impacts for buyers, right? Because it improves your buying power, but that you'll have more competition because more buyers will come back to the market. But one thing I don't think is getting talked about as much is how it could free up inventory from sellers who are finally willing to make a move.
And I think a lot of people got used to the interest rates at this point. I mean, I just got my 7th first-time home buyer in contract on Friday. So I'm closing first-time home buyers, and that's, they're qualified. They can do the deal. So I feel like that's just going to open up more optimism across the board.
I do agree with you on that. And we've talked about that this year, that it seems like people decided that for whatever's happening with interest rates, if I don't buy now, it's not going to serve me to wait, which Sandy
leads us right into our next.
Yes, exactly.
But the thing I wanted to say is I think economic events are going to move. Ooh, that was not what I was doing. Close your eyes. I think that what we could see have a really big impact on rates is more recessionary indicators, because it really was the jobs report that did the majority of the movement last week to rates. And so, yes, the jobs report does put us a shoe-in for a rate cut, but it was the market seeing that the labor market's weakening, and anything we see in terms of bad news for the economy is good news for interest rates. So, in previous times, COVID, that was economic uncertainty moves interest rates in a positive direction, because interest rates are actually not directly correlated to the Fed funds rate. They are impacted by the demand for bonds. And investors have more demand for bonds. They want to put their money in a safe space during times of economic uncertainty. Like one more Ebola case, that means interest rates improved back then. Now, COVID comes along, investors moved a lot of their money to bonds. Then the Fed also started cutting rates, and we saw something wild happen. What I think we'll see this time is the markets will react to Fed's cutting rates, but the markets will react more to any signs of a job loss recession. And that's why I think interest rates are done going up.
I agree. Okay, so we're going to go over the cost of waiting now. So
why are we going over the cost of waiting?
Because we're talking about interest rates coming down, which is great. And I'll talk about that too. That could actually improve your monthly payment if you buy in a year than today, if we estimate what rates will do. But there's so much that you would miss out on in terms of your home going up in value if you decide to wait, because home values, especially in our area where we have so few, are going to continue going up in value. So let's just
this is for the person who's saying, I want to wait to buy because you guys are talking about rates coming down.
Exactly.
And we'll help you decide if that's smart or not.
Exactly. And I mean, it is always a personal decision, but let's look at the numbers. Okay, so
Sandy's favorite thing to do.
I do.
Chris Biaggi requested to be in your live on Instagram.
Love you, Chris, but I don't think he meant to do that. That's our CEO. He's the owner of our company, but he's not the most Instagram savvy at all times. So I'm going to assume he didn't mean to do it. But if you did mean to do it, please don't fire me.
Okay, I'm just going to keep rolling. Okay, so if we look at this chart on the cost of waiting, as I was saying, as home prices increase, this is a huge wealth gain opportunity for potential buyers buying today. So, like I said, the payment, if you look at the very bottom of this graph, could be slightly lower, right, if rates do what we think they're going to do and come down. But look at the property value. Now your home that you're buying is more expensive the longer you wait. Your down payment's also going to be more the longer you wait. So if we buy today, we get 1 year of the home going up in value under our belts. Interest rates come down. We can also refinance to lower your monthly payment. Now you have more equity because you've been paying your mortgage for a year and your home value went up. It's possible maybe we could remove your mortgage insurance or lower your monthly payment or just lower your mortgage insurance. So all of this mapped out brings us to the total cost of waiting, or the benefit of buying now, to be approximately $38,000 if you buy the median home price now versus waiting for 2 years.
I like it.
Right?
I saw something from Keeping Current Matters. Did you see that? Where they said that the average home in the U.S. stands to appreciate $83,000 over the next 5 years. Like, there's not a lot of ways to make $80,000 just doing something you have to do anyways. Like, you could literally say you're making that money while sleeping because you have to pay for a place to live either way.
Right. Well, and how about the people who said they were going to wait during the pandemic because prices were so high and it was, so crazy. People were throwing spaghetti at the wall. Now they're continuing to wait. I mean, how much have you missed out on equity?
I saw this headline from Wall Street Journal last week that I was like, it said starter homes in the U.S. reach $1 million. I'm like, why would you say that to the people? That's just going to infuriate them.
That's going to discourage them.
That's like in the highest price places. Like if you're a first time home buyer in San Francisco, that's the situation.
Right.
But when you put out a headline like that, then a lot of people are like, oh man, I'm never going to buy. Because to speak to your point, everyone who's waited it's only served to make you feel further priced out, right? You may or may not be priced out, but waiting has served to do that to you because nothing got cheaper in the time that you were waiting. Rates didn't get cheaper and homes didn't get cheaper. For the record, though, the average starter home in Reno is not $1 million.
Right.
In one zip code, maybe, but that's not a starter home. You can find definitely affordable homes in Reno.
That's the point. What do you define as a starter home?
Right.
Well, and you've touched on it many of times. I mean, trying not to time the market. It's when it's right for you. And if you're comfortable with the payment and you can get in the game sooner rather than later.
I had to take that slide out because I was sick of hearing myself say the same thing.
And here I am to say it for you.
It's been a while.
I really appreciate you doing it.
Yeah. It's been a while. Okay, so for our strategy this month actually is one where we don't get paid on it, but we want you to know about it because we want you to know all the tools, because investing in real estate we firmly believe that is the way that you grow wealth. So if getting financing from the seller is the way to do it, we want to support you in that.
Even if it cuts us
out. So when you find a home that offers seller financing, you're able to structure it however you want. There's flexible down payments. You get to decide what interest rate. It's just like a DIY financing strategy. So there's a lot of pros in terms of flexibility and making things happen. I actually just last week had a client get into contract with seller financing with a less down payment, really great interest rate. The cons, though, are that it can be hard to find. Your seller has to own the property free and clear. It's not always appealing to the seller because sometimes they just want to wash their hands of a property. Smart sellers will sometimes see the benefit of having delayed income in terms of tax purposes. That can be really beneficial.
This is a huge benefit. You can't understate that because for them to not receive the lump sum all at once, will have huge advantages for them.
Yeah.
And it keeps a stream of income coming into them, whether they're retirement or whatever. So I think that's positive.
Yeah, definitely. And then some other cons are you just have to be careful, right? Because it is a bit of a DIY financing situation. So you want to make sure that it's being properly serviced by a mortgage servicer because eventually you're going to refinance out of that loan. We need to have regular payment history of you making your payment every month to be able to refinance. So make sure it's handled properly. Also, sometimes they'll have a balloon payment. So you just need to be really aware of what you're getting into. If you have a balloon payment, that means, okay, you make payments for a couple of years. Now, all of a sudden, the entire rest of the loan is due in full a couple of years from now. So you just need to have a strategy to make sure that you're in a good position now and later.
Right. We often are financing investors out of seller financing situations. So we've seen how common it is. And a lot of our investors, when you reach a certain number of financed properties, it's going to be hard to get a regular mortgage. When interest rates in the market are at 8 to 9%, but you could do seller financing at 10% and put only 5% down, savvy investors are doing this. They're using seller financing all the time, and we see it firsthand when we refinance them out of it. It's a short-term solution, but it's a really effective one.
Yeah, definitely. So keep an eye out. Sometimes the listing will say seller financing available. Sometimes you just have to try and get that information from the seller or be a little creative. But yeah, definitely look at that option.
I had a client that's doing an assumable loan, and so I'm trying to follow the situation. So I had this guy pre-approved, and then he found a property where it was the current mortgage was, I can't remember if it's FHA or VA, but he's assuming it. And he's going to have an interest rate in the 2s. And so he's like, sorry, I don't get to work with you on this, but it worked perfectly for him because the biggest problem with assuming a loan, which is not seller financing, but it's another like creative tool, is you can go in, you get to take over the seller's existing mortgage, but you have to fund the delta between the sales price and the down payment because you're not going to get another mortgage for the difference. Well, he had a large down payment. He had $100,000 that he'd saved up. So he's in the process right now, and I'm following it because I want to know. I haven't seen someone successfully close on this yet. It's only been something that really gained speed in the last year. It's just that the closing so far has been extended 3 months because the servicer who has to approve the transferring of the loan, they're not that motivated to do it because they're not making any money.
Right.
And it's like a big servicer, right? So it's the equivalent of when you work with a call center loan officer and your file's kicked around between like 50 different people who nobody really cares. That's what he's running into. Again, it'll be worth it at the end when he has a 2% interest rate and the seller marketed this, so they're not upset. It's on them. It's their mortgage servicer that's making it take so long. But I'll keep you guys posted on the progress of that story because even though I'm not involved anymore, I've asked the agent and the buyer to keep me in the loop so that I could share that information with people in the future who want to try to assume a loan.
For sure. Yeah. No, there's a lot of different creative financing options out there. And so just educating is the best way.
Yeah. Have your clients done a lot of seller financing?
No, I haven't seen a lot of it.
It is,
I mean,
I feel like
rates were so low, so that wasn't a thing. But depending on where we go, you know, every market's different. So.
Yeah, I feel like it's another one of those things like assumable mortgages that's going to be picking up speed. But we'll see with rates coming down.
This is the thing about people in our industry, though, is now we're like, if you're not going to be willing to learn about all these niche, unique situation type solutions, then you're really going to be at a loss because it might only be one time in your career that you do it, but there's never been a demand for that kind of stuff like there is right now.
Right. Well, and it's your advantage to have all these things in your tool belt because you never know when they're going to present themselves. It could be, you know, an elderly person and their grandson or granddaughter, and they are wanting to transfer it and, you know, whatever.
Right.
So,
yeah.
Yep. Got to stay on top of it.
Be the best advisor.
You guys should follow us on socials. We're here the first Wednesday of every month giving you this update. But in reality, we're actually providing daily updates on our social media. So follow Kirsten, follow me, follow Sandy. And we put a ton of work into keeping you in the loop on what we're seeing actually happen because nobody can count on the media anymore to tell you what's really happening. So connect with us on Instagram and we'll keep you in the loop. Has anyone said anything on the live that we need to answer?
Not that we need to answer. Val Jackson and Yoni.
Hi, Val.
Just like kind of hyping all up and what you were saying. And nobody on Instagram Live that I can see. Although you were right about Chris. He did not make me do that.
Just had a gut instinct there. Okay. So I was thinking about doing this, and let me know what your guys' thoughts are, but I guess I should back up and explain. Okay. Everyone's going to be talking about refinancing over the coming months because it is an amazing tool. And a lot of you purchased your home with the plan to refinance it in the near future. Your mortgage is in reality a tool that you should be using to make sure that you're accomplishing your financial goals. Buying the home was just one goal, but then you can continue to use your mortgage to make sure your monthly cash flow is the best it could possibly be. And you can tap into your home equity at times using your mortgage. There's a lot of reasons that people will refinance. Debt consolidation, like I just mentioned. Sometimes people will refinance to speed up debt payoff, whether that be other debts or the mortgage itself. You can shorten the term. People refinance their house to accomplish other investing goals like starting a business or helping their kids go to college or other things. A very, very popular refinance reason is to lower your monthly payment by taking advantage of a lower interest rate. The thing is there's a lot of predatory lenders and they're going to be popping up very hardcore in the coming months because when, as we mentioned, interest rates were promised to be cut 4 times this year. So at that point, mortgage companies, and I'm not talking about companies like All Western Mortgage, I'm talking about the like call center, Rocket Mortgage Company. They've been staffing up on loan officers getting ready to capitalize on this boom. And then it didn't come. So they've been paying their processing staff, their underwriting staff. Some of these loan officers are on salaries. They've been paying them and bleeding out, waiting for rates to come in. So when rates come down just the littlest bit, they need to start recouping those losses. And so the solicitation is going to be heavy on homeowners to refinance for the slightest drop in your interest rate. And I was thinking maybe we should do a webinar focused only on how to avoid a refinance scam. I'm going to give you guys some tips, but you want to do a total cost analysis, which runs your monthly savings compared to the costs of the refinance, because there are closing costs that come with the refinance. For our clients, we do a refinance on the property we did the original loan on for free, which specifically means we're waiving our bank fee. But a refinance has title company costs. They're about $1,200, but could be a lot more depending on the title company chosen for it. And it has an appraisal cost in some situations. Sometimes you'll get your appraisal waived, sometimes you won't. You also have your taxes and insurance that you have to fund a new escrow account. So what you'll see happen is lenders, on top of all the costs I just mentioned, they'll also have you pay points to get the rate down even further than it's naturally dropped so that they can refinance you sooner. This is why you need to do a total cost analysis that will compare what you're saving on a monthly basis with the cost of the refinance to see when you're breaking even. You have to look at your loan estimate and understand how to read page 2 of the costs that are being broken down. That's where you're going to find the origination cost. Some red flags to look for on there is how much are the title company fees? How much is the bank fee and the origination charge you're paying? And what is your new loan amount after this? Because when you purchase a home, you can't finance your closing costs. But on a refinance, you can. Great news for the buyer, great news for the predatory lender who can hide all these costs that you're not going to physically pay in your new loan amount. So that's something you want to analyze. And you want to consider transferring over your existing escrow balance to keep the new loan amount less, so you're not refunding taxes and insurance that you've already been paying as part of your mortgage. I was thinking we could do a whole webinar where we show you the screenshots of this stuff and exactly what to look for on the loan estimate, how to understand a total cost analysis, and how to evaluate your new loan amount. If you guys think that would be helpful, let us know.
And every scenario is different. Every person's different. And so just at the first drop of rates might not be the most beneficial. And that's why you have to, work with someone you trust and who.
We have so many systems that will alert us when rates have dropped enough for each homeowner to meet the net tangible benefit of a refinance.
Right.
But then as human beings, Sandy and I watch and we're like, well, actually, we think rates are going to come down even more significantly next month. So let's just wait 30 days.
Right.
There's no reason you can't refinance multiple times, right? As long as you're meeting the net tangible benefit every time, and your goals may change, right? At some point, you might refinance to pull cash out. Later on, you might do a rate term refinance to switch back to a 15-year loan and pay things off faster. There's no problem with refinancing multiple times. I just don't want you to do it needlessly.
Right.
Next month, we're going to do, our guest is an attorney, Stephanie Funk. She's going to join us to help us dive into like trusts and wills and probate and what you should be worried about versus what's just scare tactics and what you actually need to protect your assets. But one thing we're seeing is that a lot of times when you go to buy a home, your loan officer isn't advising you to then create a trust and put the title of your property in that trust, then move your bank accounts into that trust. And I was on a webinar where a loan officer was being really vulnerable about how he closed a family on a house. And then a year later, the wife called him and her husband had passed away. And he was the main income earner. And he was like, I'm so sorry for your loss. Like, thank God you have life insurance. And she was like, no, I don't. And he's like, oh my God, like this is on me. I should have told them to get the instead of just selling them a mortgage, I needed to tell them about all these other things. And so our team tries to put a lot of focus on the things you need to do post-closing on a house. We want you to use real estate to build wealth. We've seen it work. We know it works. We're doing it ourselves. We also want you to do all the other steps that position you well financially. And a huge part of that is getting a trust set up. You think this is something for the rich and the famous? It's for everyone. Everyone needs a trust, and they need their house to be held in that trust. So we'll dive into that more next month.
Okay, and we always want to leave you with a success story. So we recently had a file close. We had to be really creative putting together the strategy because it was a competitive situation and we needed to go non-contingent. So we figured out how to utilize equity from the current home, use that for the down payment on the new home. They were able to close before selling their old home, which makes moving so much easier, which made their offer drastically more competitive. We spoke with the seller and the listing agent to explain the strategy, go over it, let them know that the financing was solid. We got the house into contract. Then...
Pause. The seller accepted the offer because of the conversation with her and the listing agent because she couldn't get the other buyer's lender on the phone.
Wow.
The other buyers were non-contingent at all. We explained how we're not contingent either, but this is the exact strategy we're using. Are you aware what strategy they're using over there to be non-contingent? Not really.
Right.
Yeah. So it matters if your lender goes and calls a listing agent, for sure. So then we got it under contract and then realized there was actually a better way to structure the down payment. So we utilized different sources. It ended up being even better. And that's kind of the thing is once you get the home into contract, it's no one's business what you do. But we're going to always be putting the best strategy together for you the whole time. So it was fabulous. And now they're able to move. Actually, they had a few things to do on the new house before they moved. Then they'll move. Then they'll do a few things on the old house. They'll get more money, be able to really give it the full listing prep and list at a more leisurely pace and get more money for their home because it's got that additional prep time put into it.
It's been depersonalized, decluttered. Yeah. How does
so
it
it's really important who you hire matters, both lender and realtor.
As a realtor, let's pretend you're a listing agent. How does it make you feel when we say, once we get the house off the market, it doesn't matter what we do?
Because the deal's not done till it's done.
But it's true that, like, I do explain this to my buyers, and I'm sure it makes listing agents, like, uncomfortable. But I explain to them, like, we're not committing to buy the house when we make an offer and get our offer accepted. We're getting it off the market so somebody else can't buy it while you do your due diligence. Yeah. Because you're going to have inspections and contingencies. But also, like, I have to make sure, the way I view my job as a loan officer is I have to make sure that I have a way that I can close them when I pre-underwrite them. I have gotten them pre-underwritten to close this way.
Right.
If I decide there's a better way to close while in escrow,
100%,
then I'm going to do it.
Yeah. For sure.
So we had a very simple strategy to get those buyers' funds to be non-contingent. Behind the scenes, it got way more complicated, and we did different things because it was better for them, for their taxes, for their retirement, for all kinds of other. That down payment came from a lot of different places.
Yep.
But when we made our offer, we didn't list all that stuff because we had a very simple way to get it done. And I think that's the difference between, like, a lender and a realtor, the whole team wanting, like, to do, even if it's extra work, what's actually going to most benefit the client in the long run.
Yep.
And that's the goal of our job, right?
Every deal's, like, getting less and less simple. Have you noticed that?
Oh, yeah.
Yeah.
Yep. They're all difficult right now.
I just switched another one. We had a great strategy, got the house under contract. Insurance got a little better, like everything got a little better, and I was like, oh, we can switch to conventional, and we did it. So I was like, okay, well,
by the skin of her teeth, she switched that to conventional, where you have like
0.04%
on the DTI.
I was like, we're doing it, it's better, it's happening.
Job. Yeah.
Okay, so we want to give away 2 tickets to the Future is Female. Michelle's gonna just do some random number machine.
Got a random number generator.
And then she's going to tell us who came live, who gets to have 2 tickets to the Future is Female. And I don't think you should do Theoni if it picked her, because she will not come.
It did not pick her.
Theoni's in Delaware, a beautiful beach town in Delaware, nursing her new baby.
Congrats on your baby.
Aww.
Chinu?
Yeah, Chinu! Bring a client who would love to learn about real estate investing. Okay, guys, if you have any questions you want to chat with our team about, if you are a real estate professional, realtor, lender, we're happy to talk to you too. If you're a buyer who wants personalized advice, seller, use this QR code and set up a time with us. We're happy to chat with you one-on-one and explain how all this stuff would impact you personally. Otherwise, we'll see you next month.
Thanks, everyone.
Thank you.